Hello, welcome to Fininvest Niger. My name is Tom Princeville. I am a certified securities and investment specialist, and I've been investing for the past 2 decades. And in the course of this presentation, I would like to talk about uh, fundamental analysis of Unilever Nigerian Plc, the fundamental analysis of Unilever Nigerian Plc. So let's undertake this exercise together. And I want to start with the company's revenue. So the company generated a revenue of 149.523 billion in the full year 2024 as against 214.669 billion in the full year 2025. So from approximately 150 billion to 215 billion. So you could see, a remarkable difference, and of course, an increase in the level of turnover for this company, Unilever. So let's highlight the company's gross profit. The company made a gross profit of 55.149 billion in the full year 2024 as against 89.628 billion naira in the full year 2025. All right, so that's an increment from 55 billion to around 90 billion naira. That's a difference of about 40,000, approximately thereabouts. As for the company's operating profit, the company generated 18.361 billion naira in the year 2024, the full year 2024, as against 42.653 billion naira in the full year 2025. So there's an increase of about 20 billion naira from the full year 2024 result and the full year 2025 result. Now, for the profit before tax figure, the company made a profit before tax of 22.650 billion, 22.650 billion as against 51.802 billion naira. That's a difference of about 30 billion naira, approximately. And not only that, the company equally generated a profit after tax of 15.143 billion naira in the year 2024 as against 30.740 billion naira in the year 2025. So we now come to the most crucial, the most important, the most significant aspect of our analysis here, and that is the company's earnings per share. This particular figure is so important. It's important in the sense that this is what regulates the amount of money the company pays out as dividends, and that was also what would equally govern the movement of future stock, the future stock price of the company. So you could observe that there was an increase in earnings per share, as indicated here, from 2 naira 64 kobo to 5 naira 43 kobo. From 2 naira 64 kobo to 5 naira 43 kobo. There is an increase of about 100%. The earning per share, doubled. And this is a welcome development. It's a very interesting news, to observe that a company is able to double its earnings per share. That company is in the right trajectory, and of course will certainly embark, on a future growth journey. All things being equal. Now we are through with the profit and loss section of our analysis, and then we want to look at the cash flow and the balance sheet section of our table here, because the entire table represents, it's a summary of the company's financial statements. That's what is summarized in the whole table, as you could observe here. So let's now go to the other section, this other segment of our analysis. The company's price, as indicated here, is 85 naira 50 kobo, 85 naira 50 kobo, and the shares outstanding is 5.745 billion. 5.745 billion is the number of shares outstanding. And not only that, the company's market capitalization is 491.20 billion. 491.20 billion. And how do you obtain this? Is by multiplying the company's share price by the number of shares outstanding. That will give you the company's market capitalization. This is a very important figure because it tells you precisely how big or how small the company is. It's a matter of relative comparison. The company is fairly big actually, and usually the size of a company could determine the kind of strategy, the kind of the kind of investment strategy you will adopt. Okay, you will not really adopt the kind of strategy you will use for penny stocks for this kind of a big company. So this is what tells you or regulates the strategy you will use as an investor. So we want to come down to the company's cash and a balance. The company's cash flow is quite robust and healthy in the sense that it's generated and kept cash at hand and cash at bank of about 110.370 billion naira, 110.370 billion naira. That is the company's cash reserve. In other words, the company could embark on emergency funding for its project without having to depend on expensive high interest rate bank loans. And not only that, this is the company's equity. The company has, more importantly, it has a positive equity. All right, a positive shareholder fund. Same thing. That's this is the difference between the company's assets and its liabilities. All right, so by the time you subtract the liability from the assets, you are going to arrive at 105.997 billion naira, indicating that the company has a rather strong balance sheet. Okay, and now you come to the equity per share. So simply divide the equity, right, by the number of shares outstanding. That will give you the equity per share. All right, so this particular company, this particular figure, equity per share, sorry, it ought to be in naira. The equity per share here is supposed to be in naira. So there's a naira value there, equity per share. That's 18 naira 45 kobo. 18 naira 45 kobo is the equity per share, and it also represents the company's book value per share. So this particular figure on its own it's not really telling us much. You have to compare it with the actual company share price, which is 85 naira 50 kobo. So you subtract this from this. When you carry out the subtraction, the larger the answer, the larger the result, the more expensive the company is considered to be, and the lesser the result, the less expensive the company is considered to be. And then we now come to the company's PE ratio. The PE ratio here essentially is the ratio of the company's share price by the earnings per share. So in this case, we are going to divide 85 naira 50 kobo by 5 naira 43 kobo. All right. This particular by the price all over the earnings will give you the earning per share. They give you the PE ratio, which is 15.76. Okay. As what the value, what the significance of the PE ratio here? It tells you how expensive or how cheap the company is in relation to other companies in the same industry. You have to compare, apple to apple, oranges to oranges, and you may actually by extension equally compare this particular value with the PE ratio of the overall market, or the ratio from other companies in the market is still in order. It's not completely out of place. So if you look at the entire analysis here, you discover that the company has done very, very, very well, has done tremendously well. It's an excellent company, actually. There's enough cash balance, there's sizable equity, strong balance sheet, strong cash position, and you could see this increase in parameter in this in the stated parameters here, which resulted in a healthy increase in the company's earning per shares. Okay, so I would give this particular company a buy recommendation. You could make it a part of your portfolio, probably 5% or at most 10% of your portfolio. This company is doing quite well. All right, and so please like this video and subscribe to this channel if you've not done that. And not only that, if you are very serious, okay, it's for those who are very serious about investing. You have the capital, you have the wherewithal, but you need a kind of guidance, a kind of hand holding, a kind of direction. All right, so I could come in and see how I can help you create, build a profitable portfolio. And so this is the contact you could use to get across to me and see how you can work together. So it is 080 662 8818. So that's my contact. You could WhatsApp me, and then let's see how we can work together. It's only for serious minded individuals. All right, so you will contact me here, and let's see how I could be of service, I could be of help, I could be of assistance to you in your investment journey. Either you are an experienced investor, you need to rebalance your portfolio, or you are a new beginner. Just contact me on this number, and then I can see how I would come in and help you out in this particular wealth creation process. Thank you very much for watching. You could also consider other videos in my channel as well.